These 10 lessons will save you money, stress, and years of mistakes. Let's dive straight in. Lesson number 1. It's not fast money. I thought I'd flip $50 into $5,000 in a month. Newsflash, Forex isn't a shortcut, it's a skill. Once I treated it like a career, things changed. So when I started trading, first off, I funded $50, which my sister gave to me. I cajoled her and she gave it to me. I funded it. Guess what? I already thought I was going to be buying my next car because the intention was I just want to stop jumping buses, make $5,000 in a few weeks, and then go get a very good car to start moving to the trading academy, which I was learning from at the time. Things was never as I thought. So now what I now know is that Forex trading, you can't really master this thing even in a span of 6 months. You really have to be able to dedicate your time for 1 year, a year and a half, or 2 years. That was my case at least. Now, do not get me wrong. I'm not saying other people are not getting it even faster, about 3 months, 6 months, and all that. But the chances and the cases are rare. I'd rather want you to set a very big expectation and work really hard at achieving it than build your expectations into making you feel that you can be successful in a couple of months. All right. Lesson number 2. Risk management is more important than strategy. I spent months looking for perfect strategy, but I was risking 30 to 50% per trade, or sometimes I didn't even know what I was trading. I didn't even know what percentage I was trading. So I got to find out that my strategy wasn't the problem, but I keep changing what wasn't the problem over and over and over again. What was the problem was risk management. That's because I had already thought that people that are making this $5,000, which is my goal at the time, what I wanted to make, is because they have or they know something that I don't know, and that thing must be with their strategy. So I kept finding strategy, not knowing that what they knew that I didn't know at the time was risk management. Those people, they trade with big accounts, but then they use small leverage, and then they use a very low lot size, and then they risk like 1%, 2%, depending on the account. And then I'm seeing results, astronomical results. And then I'm always wondering with my $50 account, okay, how can I get the same result? It was just like a magic to me at some point. But now, looking back, I remember clearly now, it's just risk management that I lacked. What to do on $50 was to risk like 10% because it's a small amount of money. So I now know that if you have a small amount of money, risk a bit more so that the wins can be meaningful. I do not risk too much that is going to hurt you too as well. If you have a bigger amount of money, risk little. So the bigger amount of money you have means that you're going to stay in the game or increase your chances of being profitable in the game. Strategy is great. Risk control is what keeps you in the game for long. Lesson number 3. You'll probably blow your first account. This is something that no one ever prepared my mind for. Statistics have shown that 9 out of 10 times, newbies blow their first 5 accounts. It sucks, but it's part of the learning curve. Just make sure you learn from it. That's what is really important. Thinking that you will never blow your account, oh, I'm different, I'm a grace child, my story is different, I'm a child of God, my own will not be like their own. Just cut that chase and always know that you learn by blowing your account. You definitely will blow account. Your case might be different. Let me know in the comment section if you've never blown an account and you're a successful trader this time around. There will only be a few people that they will say that in the comment section. Now, I'm not saying you must blow an account or something, but it just would happen. Learn to adapt, to move on, and then just keep learning from whatsoever wrong you did on that. Lesson number 4. Trading psychology is 80% of the game. I knew when to enter, but I'll panic when in drawdown. Trading success isn't just about knowledge, it's about control. How could I control myself from these losses that I'm always seeing? When I transitioned from $50 to trading about $1,000 account, my mindset also needed a shift because I was used to seeing losses of $2, $3 from my $50. But now, since I'm not trading $1,000 account, seeing losses of $100 all at once, something that is twice bigger than the account size I'm coming from, my emotions will just fly out straight out of the roof. I was really, really scared about that. So it needed time for me to start knowing that, okay, Jeff, don't get scared. This is just a drawdown. It's not going to cut you out just yet. You have to hold on. But then processing that losses, and most importantly, when I calculate that in my local currency, in Naira, that's crazy money. As at the time, Naira was 360. $100, that's 36,000 Naira. That was a lot of money. At least for me then, it was a lot of things to deal with. So with time, I started getting a hang of it, understanding my greed level, understanding my fear level. When I'm losing money, I'm always very fearful. When I'm making money, my greed increased. I always want to keep making. One funny thing about trading is that, or one sad thing about trading, if you do not strike a balance, is that you always be a sad person, whether you're making money or you're losing money. If you're losing money, you feel sad because, oh, I just lost X amount of money. I could have used this money to shop. I could have used this money to do this. I could have sent this money to my mom back at home, and then they'll be so happy and they'll pray really good prayers for me. Or whenever you're making money and then you close out maybe at $1,000 in profit, and then market still keep going. Start calculating. If I had not closed, I would have made about $5,000 right now. You're always very sad, and then you start being sad because you didn't utilize that potential profit well enough. You understand? You really have to strike a balance based on your emotions, and that's where psychology comes in, and that's 80% of the game. Lesson number 5, you don't need 10 indicators. My chart used to look like NASA dashboard. Everywhere, a lot of indicators, the type of wire and rope that is moving there. I don't even think NEPA even have that in their office. Now, I only use just 1 or 2 tools. Simple charts, clean mind, good results. So some of you right now, you may have a lot about 10 indicators. You have funny names of indicators. There's fire strategy, there's almighty God strategy, there's almighty formula. There's a funny one I saw the other time, strategy that has to do with it. It's called a green alligator. So once it turns green, it means you should buy. If it turns red, I was just laughing out. I have nothing bad against indicator traders. As long as any system that is making money for you, use it and apply really good risk management. All I'm just saying is that do not overcomplicate your trading system. That is not the problem. What you should be focusing on should be your risk management, trade management, money management, and your psychology. Lesson 6, demo trading is useful and not a waste of time. I skipped demo trading because I thought I was different. Confidence without risk. That's what demo truly is. With demo trading, you could actually backtest and forward test all your trading strategies, whether or not you are doing mistakes, and then you can correct them. You can correct them if there are. With demo trading, it also allows you to be sure of when to execute your trading. If you are disciplined well enough, you know, okay, I'm going to wake up early. Yes, it's not real money, but then you just get to see results that would have happened if that was your real amount of money. And one other trick again on demo account, do not fund demo of $100,000 if you do not have $100,000 in cash to fund your account. If you have an actual money of $1,000 in real life, fund demo of $1,000 demo, so you get to see what would have happened if that was your real cash. I know there will be some emotional difference once it's your real cash, but then it just helps just to build your muscle memory. Lesson 7, trading less equals better results. I used to take about 50 trades in a week when I calculated, or the time I calculated. But now I just do 2 quality trades every day. 2 to 3 quality trades every day. And patience is a trading skill. Even when you're not trading, staying out of the market is also a strategy. It's also a very good thing. So you don't want to trade. The more the trades you take, the more the chances you're exposing yourself to potential risks and also to potential profits. So, but then you want to go less on the risks. Lesson number 8, you are not in a race. I used to compare myself to traders showing off profit online. Everyone's path is different. Focus on your growth, not their highlights. One of the major things that you always have to know is trading is a competition against yourself yesterday versus today. You just always have to keep improving. The more you keep looking at other people's results, and some of this profit that you see that they even post on their highlights, they didn't take that profit because when they're supposed to take profit, they're busy taking screenshots. By the time they finish posting, they come back, the trade has already reversed. That's the story of many online traders, but they wouldn't tell you. And I'm telling you, I'm splitting that secret. So do not listen to any of those things that they're showing you guys. Make sure that you focus on your grind and keep going anytime, any day.